investment. I think there's been this running theme or concern with fund managers that they're not even allowed to invest in this type of asset class. And so, speak to that.
Yes, I think again it comes back to the point of what is a specified investment. Cryptocurrencies aren't specified investments. They're not in domestic legislation. They're not in the European MiFID list of instruments. However, and I should actually say the FCA has actually been quite specific and have come out and just said that cryptocurrencies aren't regulated. And this was in November last year, but be very wary of investing in crypto CFDs because derivatives on cryptos are regulated because that's a derivative investment, not a crypto investment. And the FCA has also come out on a slightly different point and said that sort of ICOs are risky, so be very wary of those. But I think that probably because the UK and the EU as a whole as well hasn't really kept quite up to speed with the developments in the US, with the CFTC or the SEC on cryptocurrencies or ICOs, tokens in the whole sort of digital asset environment. I think that's created a sort of an air of mystery and fear, which from that perspective is not entirely warranted, but where I do think there is an element of fear and anticipation is that we don't really have a very clear idea of what regulation will come in either the EU or the UK, or when it will come in. The FCA recently published their annual report for the coming year, and they talked about what they're going to concentrate on. And in this fairly hefty report, there was just one paragraph on cryptos, ICOs, and it said that they will form a working committee with the Bank of England, and work on that has already started. So it's expected that it will happen, but what also happened was a few days later, somebody from the FCA came out and said that really for the next couple of years, the FCA are going to be so tied up with Brexit that will be their priority. So I don't think there's any doubt that regulation is coming. I wouldn't be surprised if the regulatory approach taken by the FCA and other European regulators looked at where the US has been, is going, and tried to draw some conclusions from that. And I would expect that probably by the end of 2018, we're going to hear a bit more about ICOs and how they are seen, in particular, coins which are, not the stable coins or not the utility tokens, but those which have more of the characteristic of the shares of a security token type.
Yeah.
So I think that's probably where the focus is going to be on immediately.
And I think that fear based on unknown regulation is a healthy feeling among the investment community and among would-be fund managers. That understanding that regulations, just because they have not come out, doesn't mean that they're not going to be subject to those.
Yeah, and I don't think they'll be retrospective. I think the last piece of retrospective legislation we had in the UK was the War Crimes Act. So I think the chances of this being retrospective is unlikely, but it's a question of looking at what's likely to happen and making sure that structuring stays ahead of that and investor communication stay ahead. But there's one other thing I think it's worth pointing out, which is that when it comes to regulation, I do think you need to separate ICOs, offerings, and SAFT documentation from funds, crypto funds, because ICOs aren't regulated, SAFTs aren't regulated unless they may fall into being future options or entitlement, whatever. And they can go to anybody. Whereas the moment you get into the fund universe, you're automatically in a regulated environment. And that regulatory environment determines who a fund can be offered to. So it does take out the type of retail investor that an ICO can go to. And one of the possibilities which is out there is that when it comes actually to ICOs, which I think the regulation will come there first, in particular security tokens, the ability for investors to actually get in might be the place for investors for the regulators to start So rather than regulating the actual instrument, they regulate who can get in. So if it's only the big and ugly ones who are big enough and ugly enough to look after themselves, and not those sort of the retail widows and orphans, they would have taken out a fair amount of the sort of risk, and also there were some downright unscrupulous players in some of the areas of this market. Hopefully that would turn a tap off distribution to people who should not be being distributed to.
Right, and I think with a pooled investment vehicle, the aim really is to provide a higher barrier to entry just by virtue of the asset class. And so in that regard, a fund, I think, will be in a good position. We'll have to see what that will be.
And there are funds that invest purely in ICOs. One of the sort of the earlier US funds, which has become quite sort of illustrated and well known, it was like an IPO fund, but it was ICOs.
We don't represent any of those. So I think there is, making sure that we're clear on the unknown regulation when it comes to ICOs,
when it comes to exchanges. The SEC has made very specific statements through releases, through internal discussions that have been publicized, that the ICOs themselves are securities, and as such they will be subject to the SEC, and there are a lot of questions surrounding what that will look like. And so emerging fund managers need to be careful to invest cautiously in ICOs. We generally advise our clients to stay, if possible, under that 10% threshold if they have any investments at all. And that's in one part because they could be deemed an underwriter if they're investing in ICOs. And so to the extent that there are ICOs, certainly be very careful about how much exposure, and be very, very careful in your vetting of these ICOs, just because of the position that puts fund managers in. As legal counsel, we're not advising. My firm is not advising initial offerings, and that's where a lot of this liability is going to lie. Likewise with exchanges. And on March 7th, the SEC made a release that very clearly set forth the requirement of exchanges to fully register. And we are advising our funds to only use exchanges that have expressed a willingness to comply with forthcoming regulations. And that is important because that's another area of potential liability. In terms of the uncertainty that faces this asset class, I think a lot can be mitigated by legal counsel, fund administrators, auditors, and other service providers taking a very careful look at who they allow through the door. There are so many more fund managers, would-be fund managers with experience, with a great track record. Then there are really eligible fund managers with the proper team in place, with the proper experience and initial capital base and operating capital base to support a fund with longevity. And also, I think it's our job as legal counsel, we really stick hard by our internal requirements of the type of investor that can invest in the fund, and the relative net worth of the fund
manager, of the investor and the investment amount. We're seeing smaller initial amounts and larger net worth. Often will ask our funds, or in some cases require, in order to represent them, to raise their standard even above what's legally required,
if there is a particular risk factor, and generally that results in them deciding to
pursue a more conservative approach. The next question,
have many real-world asset ventures successfully transitioned to becoming crypto-funded? Not sure.
I'm on right now.
what,
I've got to go.
what that question is looking at.
I mean, if you can talk about crypto funds in the sense that they're well-run, reputable, blue chip ICOs out there, then it would be easy to see it being a credible investment. So I think if the question about sort of real-world assets is probably more to do with the ICO type of crypto, then there have been some that are very good.
With that, you mentioned the real estate backed, and that obviously some of the major scams, including some legal cases that have already hit in the U.S. have centered around just that, fraud in real estate backed or asset backed tokens, and so. There are a lot of really broad applications that
have yet to be seen, since we're dealing with a really narrow slice of that in cryptocurrency.
And I think also sort of hacking as well. And this is probably something which is particularly pertinent to funds, because generally, if you subscribe for a crypto fund, you're likely to invest via a crypto, not a fiat currency. So then you get into the storage not just of your conversion from fiat to crypto to make the investment, but also then if there is any kind of conversion done by the fund, and then the holding of crypto, and whether it's cold storage or something which is outsourced to another storage party, and this will be industry that's growing up around the storage of cryptocurrencies, and hot wallets, cold wallets. That's another area of potential weakness, which I don't think you really get so much if it's something in a private equity fund where it's cash and shares.
Yeah, and
I think Christopher's nodding.
for our clients and other one of these inherent protections that we just set a line in the sand is we take fiat in, crypto out. We have no problem with in-kind distributions, but in-kind contributions, there certainly are opportunities to do that, but there's a lot of uncertainty, a lot of risk there. But thank you, Claire, and we'll let you go, and we'll continue the Q&A, and now if you have further questions, we do plan to return in a fairly short period of time back to London. We are looking to work with a number of students and others in academia here on the Global Center side. A lot is going on in London on the research and blockchain side, and one university in particular, the University College of London, has really done a tremendous job with that. So we'll be looking to come back to do more of that. The question: what is the greatest obstacle to cryptocurrency fund management. What I would say right now is one that was just briefly touched on by Claire, and that has to do with the security, the actual security of the assets. So that brings us to custody. And custody is usually in the alternative investment space a pretty simple, straightforward matter. We have a prime broker who handles all of the transaction components from the time that investments are made to the time that the fund calls for a distribution, or the managers allow a redemption. But with custody, there are a number of companies that have provided for that. The largest is Kingdom Trust, now acquired by BitGo. There are others that have started doing custody, including banks, and some of them look very promising. But we still have the problem, even if you have a company like BitGo, which will be a digital asset custodian, they're holding only the actual crypto assets. There's not a full mechanism beginning to end to have liquidity and invest without spreading the assets out through the exchanges. And with that limitation, that provides an inherent weakness in the cryptocurrency custody chain, such that for regulatory purposes, it forms, we think, a bar for funds over 150 million in assets under management, which on the US side would require them to be SEC registered, or certain funds that are set up with managers located in states that require them to register. We're doing a study in Boston in January, February of 2019 to look at that. There are a lot of industry groups. I think this is one particularly that will be helpful to use input from other industry participants. We're doing a presentation in June with a company out of Canada that will be done at Columbia University, where they're looking at real regulatory solutions, real industry solutions, and then at the end of that, making a presentation to the SEC, dealing with the findings and where the industry is and where the regulations are and how much can be done to bridge the gap. But it is a real issue, and it's a major risk factor whether or not the law imposes a specific requirement. Everything should be done to protect as much as possible client assets or investor assets. And that comes to the real need for the fund administrator. The fund administrator is always an important piece of the alternative investment fund service provider team. In cryptocurrency, it's even more important because they're standing between the investor and the manager in tracking assets that go into the fund operating account, then to the exchanges and back to the operating account, and keeping track of the assets under management at the various exchanges and at the custodial level. And so that becomes a critical piece. In the establishment of the fund, with the offshore counsel, there's a question asking what the role is of the
the U.S. Council versus the offshore Cayman Council when structuring investment fund documents for a master feeder fund. And so we work with Harneys in doing that, and maybe you could discuss that and maybe also talk about the director, the roles of the outside directors and other requirements that they'd have.
So there's not one prescription in terms of the division of roles. Sometimes Cayman Council do more, sometimes they do less in terms of documenting.
Sorry about that. Let's start. Yeah.
There's not particularly one formula. Sometimes Cayman Council do more, sometimes they do less, sometimes onshore council do more, sometimes they do less. Fundamentally, I mean, it's important it's not just division of labour, but it's division of expertise. Because as I said in my words earlier, the fund is a Cayman vehicle, and therefore the interests that are being issued, the shares or the limited partnership interests, are governed by Cayman Islands law, because it would be a Cayman company or a Cayman partnership. So the core constitutional documents are Cayman, and Cayman Council will almost invariably do those. Sometimes there's some elements of US law or other laws of other jurisdictions that need to be worked into the documents. So the core constitutional documents are invariably always done by the Cayman Council. What overlays that is the offering document, your private placement memorandum or prospectus, which is what faces the investors, and that discloses fundamentally kind of three areas. One, the core terms of the constitutional documents. Secondly, the strategy and the strategy and investment objective, and thirdly, the service providers, the expertise, so the investment team, the auditors, the administrator, and it has disclosure on those elements. In terms of putting that together, obviously the Cayman element, which is the disclosure of the terms, so the frequency with which shares can be redeemed, or the restrictions around class rights variations, and so forth. Cayman Council will have direct input on that, and the associated regulatory disclosures in terms of the Cayman regulatory regime and associated matters. In terms of the business description and the description of the service provider team more broadly, the division of labour is variable. I mean, it tends to be that requires input from the people themselves. So the management team will typically provide a business description in terms of what their strategy is intended to be, and that may get lawyered up a bit. And equally, the disclosure about the administration auditors and so forth is fairly straightforward, but needs to get worked into the document. So it's knitting of those elements together is the kind of core function of the council who's holding the pen on preparing the document. And typically, if we're working with John or with other US counsel, it will be them that put those bits together, and we comment on them. So the way in which it would normally work is that John would prepare a first draft of the offering document, and it would go out generally for review, and the investment team would have put their input, and the other service providers would have their input, and a new draft emerges, and we would then comment on it. And often what then happens is that becomes through the term sheet for the fund itself, and then one reverse engineers the constitutional documents based on where you've ended up. So in terms of the division of labour, the offering document tends to be, not always, but it tends to be the preserve of the onshore council, and the constitutional documents are Cayman lawyers fundamentally focus on, together with dealing with the regulatory filings and things that flow from it. And obviously, then there's the overarching issue in terms of the regulatory overlay that is required, depending on where the shares partnership interests are being offered, and obviously if that's in the States, US counsel deal with that together with the associated tax disclosures. But if you're offering into Europe, then you'll engage other counsel in Europe or your other target investor jurisdictions to deal with selling restrictions, but also the regulatory and tax analysis that goes with it. So there are many moving parts. Sometimes it's just two counsel. Sometimes it can be considerably more.
Yeah, thank you. And if you want to just address that,
The
director
point, yeah. So for Cayman regulated funds, there is not no funds generally. There's not a requirement that like in some jurisdictions, that the directors be resident in Cayman. They do have to be registered with the Cayman Islands Monetary Authority, but fundamentally most directors who are able to manage a board of a fund will not have an issue in getting that registration. For a fund that's regulated with SEMA, requires a minimum 2 directors. And beyond the registration is not a particular requirement, and what drives the fund board fundamentally is tax analysis, which is not so relevant for US management. It's much more significant if you've got management control that would otherwise be in Europe or other jurisdictions, because the key point being that the board needs to be genuinely in a jurisdiction that is neutral. But that's one, but also the very significant one is, and it's become much more significant over the years, is just the expertise of the board themselves. And they don't necessarily need to have direct expertise in the field of the fund itself, although they often do, but their role is fundamentally an oversight role. So the board, people who become professional directors typically have deep experience in the industry, the fund industry, having been auditors, sometimes administrators, often lawyers as well. And what one tends to see, and again, it's a bit different, I think, than most from other parts of the world, is you commonly have 2 independent directors on a board who don't have any direct relationship with the fund manager, and somebody who is associated with the fund manager. So there's direct business expertise for the fund itself. But the board doesn't tend to be and shouldn't be fundamentally involved on a day-to-day basis, other than if they've got a principal sitting on the board. Their role is an oversight role. They sign off on the audit. They will typically convene a meeting quarterly and deal with emergencies, if you've got a suspension to be put in place, or you need to strike an ad hoc NAV or something. But in a fund that is well managed and remains liquid, typically the day-to-day management is fully delegated to the investment manager, and the role of the board is fundamentally just an oversight role.
Thank you. And just to state in general, having a qualified team of offshore attorneys and a very experienced firm like Carney's makes all the difference, not only in setting up the fund and having things go smoothly, but in presenting the fund as a strong and viable fund. The Cayman Legal Counsel that has done hundreds of funds is going to be in a much better position to be recognizable by investors. And also, there are some significant problems that can happen when care is not taken in setting up these. And as the cryptocurrency fund council or hedge fund council, we're usually called upon. We have clients spread across the world, and we will put together a team of offshore legal counsel in the home jurisdiction, the Cayman counsel, fund administrator, auditor. When there's a fund investing in equities and other securities, a prime broker, and also a strong marketing team. And each of these components are important, and you need to not have a weak link either at the management level or at the service provider level, because all of that comes together in the most difficult part of launching a startup fund, and that's capital raising. It's something I've been wrestling with for years, is helping managers to raise capital. I'll end with one last question. It was a question that was asked by a member of the live audience here, and that is, what type of fund managers, what are the unique characteristics of cryptocurrency fund managers, and how do they differ from other hedge fund managers? And I would say that there's certainly some significant attributes of the typical cryptocurrency fund manager. First, we've found that the successful cryptocurrency fund managers are very intelligent. They generally have a higher immediate access to information about technological factors that tend to be more skewed in favor of the quantitative, algorithmically driven, machine learning type of strategies, generally from elite universities, and also they tend to be younger. Now, we would expect a fund management team to consist of seasoned finance individuals, and so usually that comes into play by creating a broad team. But one of the things that I really enjoy about working with cryptocurrency fund managers is just this innovative vigor that they bring to all aspects. I've been working with a lot of fund veterans for years, and some of the excitement surrounding cryptocurrency is just in relation to this new class of fund managers and their vision for how this technology and other technologies can change the future landscape of the alternative investment industry. And I think we need to listen to them. We need to watch because little by little, these technological advances have potential to really take over the investment management space in a big way. So appreciate the participants in the panel and the audience here, and we will be recording a presentation in Dubai as our next event, and that will be a pre-recorded webinar. It should be available in a few weeks. And any questions about this or other topics, please feel free to reach out and ask any questions. If you have questions for other panelists, I'd be happy to send those along as well. Thank you. All right. Appreciate it. Thanks for sticking it out, listening to lawyers. I know it can be and without caffeine. We were born this way, so.
coming. You apparently knew about what I was talking about. I look up every once in a while. It was not in either agreement or feigned agreement. So
Well, I cover
you must-
regulation for
okay.
hedge funds. I learn every year. So
Okay.
half learning, half politics.
But you're in the asset class specifically as a